This is an amazing deposit that we are part of. This is going to be one of the highest grade open pit mines in North America, if not the world, when it goes back into production.
Making money in treacherous junior markets is challenging. You have to coordinate finding the right company with the right resource, along with timing the market. But when everything comes together and you nail it, the returns can be extraordinary. Gold has been in a 7-year downturn, but lately has been showing signs of life. The best way to take advantage of a potential move higher is investing in the highest quality junior gold companies. This is the Eskay Creek property, located in the storied Golden Triangle area of British Columbia, Canada. For decades, this was the world's highest grade gold mine before Barrett Gold shut it down in 2008 due to what was at the time low gold prices. In December 2017, the team at Skeena Resources secured an option to acquire the entire property from Barrett, and they've been working on it ever since. The results have been staggering. In layman's terms, what Skeena has discovered so far makes Eskay Creek one of the largest early-stage potential open-pit gold discoveries in the world today. After a rough last few years, the market may finally be waking up to what Skeena believes they have. But it's the long-term potential that's so significant. Today, Skeena has a market cap of around $40 million. By comparison, Pretium Resources owns the nearby Brucejack gold mine and has a $2 billion market cap. The work planned here over the next year will likely indicate if Skeena has a real shot of joining Pretium in the big leagues. Kelly Earle is a geologist and vice president at Skeena. She's already had a taste of what it's like being on the ground for an enormous gold find. She was in Turkey for the Hod Maden discovery.
I was on the ground back in 2014, right before the first drill hole went into the ground on Hod Maden. And that was a pretty amazing experience to see it grow, and the size and the grade of the discovery and the technical team there is spectacular. You don't realize it when you're in it at the time, that you're part of, one of the highest grade discoveries of, say, a generation. But it was exciting to be part of it at the time.
What attracted you to Skeena? Because obviously you had a lot of options. Why would you come to Skeena?
So I was initially drawn to the Golden Triangle, the assets they were bringing into the fold, the possibility of acquiring 2 past producing mines as legendary as Snip and Eskay Creek. So that's really what drew me in. But then what kept me here was really the team, a really young, keen team that I think is really the future of junior mining in Vancouver.
Well, this young team has definitely been making some good discoveries so far.
Yes.
Why don't you unpack what you've discovered up at Eskay Creek?
So at Eskay Creek, excitingly, we just announced a 4 million ounce resource combined between indicated and inferred at 4.5 grams per ton open pit. And to put that in context, most open pit mines operating today are around the 1 to 2 gram per ton mark, and ours is at 4.5 gram per ton, and we see a pathway to bring it closer to 6 grams per ton. So it's a world-class deposit from a once legendary mine. Eskay Creek was the highest grade gold producer in the world when it was in production. It's very exciting to think that we're really just have found what's left, what the remnants are, but even the remnants are extremely high grade by today's standards.
Barrick owned Eskay Creek, and then they stopped mining it around 2007, 2008,
yes,
somewhere
2008.
in there. So why did they stop, given the fact of what you folks have discovered?
So we get this question a lot. It's hard for people to understand, why it's so great, if there was 4 million ounces left there, why on earth did Barrett walk away? And it's really just a function of the price of gold and how remote the mine was at the time. So when the mine was in operation, it was all diesel powered. So absolutely everything ran on diesel, which for the most part was flown in and flown out. There was road access, but it was still diesel powered. Secondly, the price of gold was significantly lower than it is today. So the decision to shut the mine down was made in 2005. Price of gold was around $450, $500 an ounce. And that meant the cutoff grade, so to hit a 20 gram per ton head grade at the mill, they needed a 15 gram per ton cutoff grade, which is crazy by today's standards. So anything below 15 grams per ton was just considered waste. So if you look at it in the context of the time frame, it made sense that the mine shut down. Also, Barrick was just bringing Placer Dome on board. This was a big several 100,000 ounce a year producer. The grades were dropping off at Eskay. The production annually was dropping off. It didn't make sense to keep it open anymore because of how remote it was and the cost of producing it. So in many ways we're lucky because we're left with the remnants that are now extremely high grade by today's standards, and the infrastructure has also improved dramatically since the mine was in production.
The infrastructure obviously must be already there, and my understanding is that things are even easier to get in and out of there than they were, say, even a decade ago.
Within the last 10 years, Highway 37 and the Northwest Transmission Line have been put in, which goes all the way up to Imperial Metals' Red Chris mine. And then within the last 10 years, there have been 3 hydroelectric facilities built between Snip and Eskay Creek. So areas that were once all diesel operated for mines, we now have 4 cents a kilowatt hour power. So dramatically changes, the OPEX. We've talked to some engineers who said historically 50% of OPEX would have been diesel, and now with hydroelectric power that would be more like 10 to 15%. So it dramatically changes the cost to put it back into production. And at Eskay, the hydroelectric facility is only 7 kilometers away down a paved road.
This is Skeena's CEO, Walter Coles Jr., the son of a very senior former U.S. diplomat working in states that comprised the former Soviet Union. Coles is well versed in navigating the halls of power. Skeena's projects are located in British Columbia, and Coles has made it a priority to maintain an excellent relationship with BC's left-leaning provincial government and local First Nations groups.
For us, our experience with the NDP government has been phenomenal. Like from John Horgan, as the premier, to Michelle Mungall, the mines minister, to her staff, Dave Nicolishan, who's a deputy mines minister. I'll even shout out Peter Robb, who's the assistant deputy mines minister. When we've had problems with delays in permitting, we go to Victoria and things are fixed right away.
There's been a general perception that the NDP government in British Columbia is not favorable to resource development projects. Obviously, you've seen the flip opposite of that.
Look, I think the facts can speak for themselves. Mm-hmm. BC has permitted more mines in Canada than any other province in the last 3 years, right? That speaks for itself. KSM last year got all their permits. The Red Mountain, IDM's Red Mountain mine got all of their permits. Pretium was permitted, I believe, in less than 2 years. I'm talking about the Bruce Jack mine. Red Chris got all of, or that's Imperial Metals was able to permit the Red Chris mine. This is all in the Golden Triangle, and all within the last 3.5 years. There's political, in my view, there's strong political support for mining in this province.
So what's the game plan then, moving forward?
Our game plan is to aggressively advance Eskay Creek. And the idea is we get the PEA done early in Q3, and we'll immediately start, I hope, we'll start pushing towards a feasibility study. And we'll probably start to permit Eskay Creek as well, to be able to put this mine back into production, in the next couple of years.
So obviously the resource market has been really tough for investors. It's about as tough as it gets.
Understatement. Yeah.
Right. So why, given the general market that's out there, why should an investor give you, maybe a second or third look?
It's easy. In my mind, it comes down to Eskay and Snip. The Snip is our other project. Again, a past producing mine. There just aren't deposits like this around the world. They're very, very rare. And our market cap right now, today, is about 42 million Canadian. And we have 4 million ounces of very high grade, very attractive resource, and it's a combination of gold and silver. But I call it 4.5 million ounces of gold equivalent. If you look at the valuations of other very well-run companies, let's say a Barkerville, or let's say an Osisko, or let's say an Ascot, as comparables to Skeena, I mean, all of those market caps are, north of 175 million. And frankly, we have more resource than any of those companies, right? And ours is open pit. The rest of them got to go underground. So ours is easier mining. I would say, adjusted for open pit versus underground, better grade, and we have more. And our market cap is 15 to 20% of what these other companies are valued. So we are extremely undervalued right now. So if you're an investor and you want to, have exposure to precious metals, to gold, this is a way you can have leverage, and the quality of the assets that we have right now, in my mind, would mean that your risk of losing money is probably a lot less than your risk of making a lot of money. That's the kind of asymmetric investment opportunities all of us look for.
So you just mentioned a word there, you said undervalued. Why do you think Skeena has been so undervalued for so long?
Yeah, well, I would argue that our success at raising capital from some of the mining-focused institutions, like mutual funds and hedge funds around the world, has come back to haunt us, because there's been a trend in the world of pulling capital out of actively managed investment funds and putting that capital into passively managed funds like ETFs, index funds. And so a lot of the mutual funds that we raise money from have faced redemptions over the last 18 months. And even though they told us they liked our project, their investors were pulling money out of their funds, and so they were forced sellers of Skeena over the last year and a half.
Sure. And
unfortunately, this is, in my mind, it's like the worst, in the 10 years that I've been involved with this sector, it's the worst I've ever seen it. The consequence was we had forced sellers, and there's no bid, no buyers. And so that's taken Skeena down to the level it's been in for the last 6 months. But I think we're through all of that. I think those forced sellers are out. And so I think the stock is now at an inflection point where there's no more sellers, and now the question is there any stock available?
The next 6 months to a year are incredibly important for Skeena. The viability of Eskay Creek is what Skeena needs to prove within this short time frame.
what do you have going on now, and what do you see happening over the next, say, 6 months to a year in terms of your work there?
So we just put out the resource at Eskay that I mentioned, the 4 million ounces, and we're working hard on metallurgy because that is a question that we get a lot. Historically, there were a lot of deleterious elements, mercury, arsenic, that were associated. It's a VMS deposit, volcanogenic massive sulfide deposit. You get extremely high grade, but then you also get, some mercury and arsenic. So we're working on the metallurgy now. We are very confident that it will be clean ore. We're mining in mostly a different ore type than what was mined historically, but we need the metallurgy out and that report to show the market that it is going to be mineable. So that's a key milestone that's coming out for us within the next month. And then after that, we're going to be pushing forward on a preliminary economic assessment. So we're pretty excited about that. We've run the numbers internally and they're looking good. We've hired an engineering firm and we've brought an engineer on board to represent Skeena. So we're growing and we're pushing towards that PEA. And then while that's all going on, we will be drilling. I think people should give Skeena a look because of the amazing quality of Eskay Creek. I mentioned before about when I was part of Hot Madden, I didn't realize it at the time. I think Walter and I and the rest of our team are beginning to realize this is an amazing deposit that we are part of. This is going to be one of the highest grade open pit mines in North America, if not the world, when it goes back into production. It's pretty rare that you sit on a brownfield site in a stable jurisdiction with First Nations and government support. 4 million ounces, 4.5 grams open pit. That's a once in a lifetime project to be a part of, and I wholeheartedly believe that Eskay Creek will be back into production.
We have something very special, and it's hard to find assets like this one. The Eskay Creek deposit is the best open pit deposit that any junior company in the entire world holds right now.